Okay, so now this is a very good example. Very few suppliers, selective group of suppliers. There is a various to entry. Airline, if you want to open airline, you cannot open as you like. You may have to tick in the book several things. And then exit barrier also difficult. And the prices are very unique. So, restrictive practices. As well as imperfection in the market may also be subject to restrictive or anti-competitive activities including. Now this is to help the market be fair. The government or some gathered organizations introduce certain rules. See, this is one bad thing, dumping, selling products at a loss. Why? Just to kill the competition. Suddenly you may see 50% discount. Okay? Or sometimes one day sales. Some electronic shops, I remember I have experience in Doha, they sold this TV for 100 riyal. Only one day. And huge fight. One day Dasman, I don't know if you all remember. Dasman, they had a big fight. Most of the things are they sold at 10 riyal, 15 riyal, 2,000, 3,000 worth items. People are fighting and then they are holding the TV and then you have this one blender here and then something here, so much. So, exclusive dealing, being bound by contract only to buy from or sell to one business. You sign up a contract, we are not going to deal with anyone else. This is also bad practice. Price fixing, business agreeing to sell at the same price. Collusion I talk about. You two join, you say that we sell at this price only. So the customer has no choice. You understand? Refusal to deal, refusing to use a certain vendor. In Sri Lanka, these Muslim suppliers should be avoided because of several reasons, especially during 2018-19 time period. Limit pricing, effectively a monopoly as a new entrant discouraged. A new entrant cannot come because he cannot decide the price. Already they have very low price or very high price. Retail price means retailer cannot set own price. And then government subsidies deemed unfair to competitors. So these are some not a good actually practices. Manchester United had several leading sportswear firms who were found guilty of price fixing on football shirts. And 16 million fine was paid by Manchester United. How the market works? There are two sides. One is the demand side, other one is the supply side. The demand side, the quantity of goods that the potential customers would buy or attempt to buy. Either they will purchase or they would like to buy. If the price of the goods was at a certain level, if I am happy with this price, I am okay to purchase. On the other hand, supply, the quantity of goods that exist in suppliers or would be suppliers. Do you understand the word would be suppliers? Potential suppliers would want to produce for the market at a given price. So the customers have an expectation of a price and the suppliers have a different expectation of a price. Actually, it's contradicting always, and it will come to a matching point, and that point we call it equilibrium price. So what impacts the demand? Obviously the price. If the price is high, demand is low. Interrelated goods, substitutes and complements. You know those two items? Now, bread and butter. Bread and butter what? Substitutes or complements? Complements. And bread and cheese. Or bread and jam, sorry, butter and jam.
That's substitute.
Substitutes. Understand, no? So, based on the interrelated goods, see, substitute they are putting tea and coffee, and complements they are putting bread and butter. Price of tea will have an impact of the price of the coffee. Since it is substitute, the price of the tea, if it increase, demand of the coffee will increase. Understand me? But if the price of the bread is increasing, demand of the butter will reduce. You understand me? And then also income levels, normal goods and inferior goods. Do you know the difference between normal goods and inferior goods?
Inferior means luxury?
No. Inferior means opposite of luxury actually. Let's say this month my earning is 20,000 riyals. Next month my earning become only 2,000 riyals. This month I have a usual pattern of going to restaurant and having a very lavish style of life. KFC, McDonald's, here, there, everywhere I go for me to consume my meals. But with that, when I have the 20,000 pattern, I will live with this. But then suddenly my salary has fallen into 2,000. So my income level reduced. Can I still go there? No. Then where I would rather end up a Malabari restaurant and I will eat paratha and salna. I'm not trying to say paratha and salna is inferior goods. But if you really compare, that is the situation. Good example is color TV and black and white TV. Now, these days we should not bring that example also. We should talk about smart TV and a normal TV. Smart TV became a normal product and the normal LED TV becomes an inferior product. Mobile phone. Smartphone becomes a normal product and that the 3310 Nokia phone becomes the inferior product. So, if your salary level, earning level is less, you will see those people keeping such type of mobile. And people who keep these now, smartphones are very cheap. That's another point to elaborate. But generally that is the scenario. Do you understand me? So when the income level is reducing, use of the inferior goods will increase. The demand for the inferior goods will increase. Clear? Those days, the black and white TV and color TV. We had that option, no? So people who doesn't have that much good income and still they cannot avoid having a TV at home, so they will buy a black and white TV. So fashion and expectation, obviously. Despite the income level, your people at home have such a concern on the fashion, you have no choice, you have to buy itself. You cannot justify. And also income distribution. Some people, see, in a capitalistic economy, rich people become more richer, poor people become even poorer because of the concept of income, unequal income distribution. So this is the demand price demand curve. As the price is increasing, the demand is less. And as the price is reducing, demand is high. Understand me? So this is the diagram that talks at a price of $6, product A, at a price of $6, demand for 1 kilogram is there. But as the price falls at $2, the demand increases to 8. And this pattern also, there is a concept called price elasticity of demand. The diagram follows that pattern. We can calculate that. We will find out how to calculate. So that is exactly it is. A market demand curve is similar to the demand curve of a single household, but it expresses the total expected quantity of the good that would be demanded by all consumers together at any given price. Market demand curve is equal to sum of all the individual demand curves. Now, if you see this one, this is the individual single customer demand curve. What is market demand curve? Is the collection of all the customers. Now, this is the equation. To calculate the price elasticity of demand, percentage change in quantity demanded divided by percentage change in price. Can we now just try to calculate price elasticity demand for this? See, we need two situations. Situation B and situation E. Equation is what? Percentage change in, can you write it down? Percentage change in quantity demanded divided by, I will write in 1 minute. Percentage change in quantity demanded, percentage change in price. This is price elasticity of demand. So, quantity demanded, we use the term Q. Price, we use the term P. So, if I elaborate the equation, Q2 minus Q1 over Q1 into 100. Divide by P2 minus P1 over P1 into 100. This answer is price elasticity demand. One thing you please remember, this answer always minus. The answer, we will get minus only. We won't get anything plus. Please remember that. Okay? So how we interpret, we will talk about it. First point, you see we can take these two off. Correct? Now can we go to the diagram now? If I assume this is Q1, this is Q2. Okay? For the Q1, P1 how much? This one. For Q2, P2 is this. So we need to have P1, P2, Q1 and Q2. So what is P1? If I say this is Q1, P1 is 6. And P2 will be 2, right? And Q1 is 1. And Q2 is 8. Correct? Can you please now complete the calculation?